This is lesson 2 of the W5T Elite Training course. It's a futures day trading strategy using the 5-minute time frame. Please keep in mind the core strategy, rules and observations we discussed in lesson 1 while we go through this strategy. So again, please pause the video and read the disclaimer. Everyone watching this presentation adheres to all disclaimers on Wave5trade.com. So let's start. So at this stage, we're only interested in the fifth wave moves. So trends still occur on any time frame, even on a 5-minute chart for futures during the day. We get that initial impulse move, we get a pullback, and then we get the fifth wave. It doesn't happen every day, but when it's trending, it works very well. And our W5T Elliott Wave indicator suite is a great way of measuring and labeling these trends to help us identify those high probability moves. So we are still only interested in those fifth wave moves, as they are the highest probability moves in a trend. When we go through lesson 3, we will add to this strategy with a stochastic type of strategy that can be used on futures as well when a futures contract isn't trending, but that's in the next lesson. So for this, why still only the fifth wave? Because all the previous 4 waves of the trend have met those Elliott wave rules and observations that we discussed in that first lesson. So this is the highest probability move, and I keep saying it because it is the highest probability move, and we've got to look for those. Even if we only have 3 or 4 trades a week, they're extremely high probability of winning. So this is a 5-minute chart of gold futures, and it shows the 5 ways behave in 2 alternate trends in consecutive days. We've developed this futures trading strategy for 6 main futures: ES, YM, NQ, ZB, GC and CL. They all behave similarly when trending. So now between those 6 you may find 3 or 4 trades a week, but remember we're only looking for those high probability moves, and we can risk that 1% on the trade account for potential rewards of 1.6 and above. So even if you do 3 or 4 trades a week, we are going to make some decent profits there. So the strategy works for both long and short moves. Let's just go through this chart briefly. So you can see there on the left we've got this ABC correction, then we have this big impulse move up. The indicator suite labels it wave 1, we get the wave 2 pullback, and then the strong wave 3, and then the wave 4 pulls back and finds support around about the close of the session. This vertical line here is the close of the US markets, but obviously gold futures and futures contracts 24 hours. So we get that support, and then in that hour post market we get the big move up and the fifth wave gets hit. And then as the Asian session starts, we get the wave 1 down, wave 2 pull back, and then a long wave 3 into the European session. And then during the beginning of the European session we get that wave 4 pullback into our automated probability zones, and then it resumes the main trend down and hits the fifth wave during the European session there. Also note we got the 535 oscillator on both of these between 90 and 140%, and also the stochastic crossing over in the oversold zone for this long and the overbought zone for this short. But again, we're going to go through how all this works in later slides. So let's go through the 3 main. For that bearish move, we're going to go through the 3 main setups again, just to make sure we understand where we're going from. So the wave 4's pull back into one of our probability zones. The amber zone is 80%, remember. So this wave 4 found resistance in the amber zone, so there's an 80% probability it's going to go on and make a new wave 5 low. The green is 85% and the red is 75%. Next, the 535 oscillator has pulled back between 90 and 140%. Remember, we measure that using a fib extension. We go from the highest point on the wave 3 to 0, back to the highest point on the wave 3, and we plot the 90-140, and that is crowned beautifully in that zone there. And then finally, the stochastic has crossed over in the overbought zone against the main direction of the trend for this part of the session. So everything, all the stars are aligned, if you like. When we get those three, that's the starting point to identify we've got a potential fifth wave move there. So the basic checklist for this: 5-minute chart, 3-minute chart optional, and smoothers out during tight range days, so you could go to 3 minutes as well. We need the full Elliott wave indicator suite, including the 535 oscillator and the new false breakout stochastic. I use the candlestick chart, but you can use Renko and other types of charts, but I like to keep things simple. A simple 5-minute candlestick chart works very well for this strategy. We also need some support and resistance levels, some decision points, if you like, on the chart. So previous day's close and the previous day's high and low are really good decision points. We don't want to go any further back than that. We need the automated pivot points, which are, you know, whether you're on TOS or TradeStation or NinjaTrader or multi-charts, they all have the automated pivot points on those charts for the current trading day. We also want to show the extended hours trading session as well, because remember, futures contracts are 24 hours, so we need to see how these are trending or not trending through Asian, European and US sessions. So we need everything there. And we like to show the stock markets close for the US to help identify those 24-hour periods, if you like, and nothing else. We don't need anything else. Okay, so let's just go through those points and start setting up those decision points and setting up our chart. So previous day's high is always a really good decision point, especially if we're going to see the wave 3 here. It was very close to that decision point there. We then have the previous day's low and the previous day's close, because that will always act as good support and resistance level as well. So those will aid us when we're trying to make decisions. We've got the auto resistance levels, as you can see here. This wave 3 that came up just pipped through that auto resistance level and just short of that previous day's high. So that causes, you know, that makes a zone, if you like, for that resistance. That then pulled back down on the wave 4 there. So really, really important we have those on our chart, and also those auto support levels and the pivot point for the day as well. So remember, previous day's high or low, extended hours high or low as well. So this is sort of isolating the wave count, if you like. So we've got we only want to look back. We don't want to go any further back than the previous day, the previous 24-hour session. So when we're isolating that potential start of that wave count, that trend, we look at that previous day's high or low, or the extenders hours high or low. We could get a bit of a spike high or low during the Asian or European session, so we need to take that into account when we are trying to look for the start of that trend. And then obviously, if once we get into the session, if there's a current day high or low and we bounce off that and have a really big impulse leg move away from there and a pullback, then we use that as to isolate our wave count and our trend. We don't need to go any further back. We're day trading futures. Yes, we need to understand the overall trend, but in reality, we're just looking at the current session, the overnight session, the previous day session. No further back whatsoever. Okay, so let's have a look. So when we're isolating the wave count here, we're going this, remember this, where my cursor is now just underneath this 5-minute here, this is the demarcation of the close of the US session, and then to the right there near this wave 4, that was the close of the US session. This is a whole 24-hour period. The session's open, but during the overnight session, during the European session, we've pulled back down. We found that low, and then we've moved away from there. That is an obvious point to isolate your wave count for the start of that trend. So as we go through the session, we start to make these higher support levels, and we can identify that low as the start of this potential trend, and then we just let the Elliott wave indicator suite label these wave counts. And then conversely, we wake up the next morning, we're down here somewhere on the wave 3 or back up on the wave 4. We see that high there in the extended hours as our start of our bearish move. So that's where we'd isolate our wave count there. So also we have the session low here. This is another example on NQ where since the close, where my cursor is here, this is the vertical line here for the US session close. We had the gap up at after the close, and then gradually moved down, pretty range bound. During the European session we got a bit more momentum, and then during the session we had this initial open and the low, and then started to move away. Once we've got above this sort of area here and we're getting these higher support levels, all we simply need to do is isolate that wave count at these lows, and then the software does everything for you. You've just got to wait for that wave to pull back into the automated zone, which it did here in green. We had the 535 oscillator pull back between 90 and 140, and we had the stochastic pull back against our false breakout dots here. Now this is new, version 3 at the time of recording, and we will talk about the stochastic trading strategy and these false breakout dots in the next lesson. But for now, you can see we isolated the wave count, we had the big impulse leg up, and then during the session we pulled back, found a nice support level in the wave 4 in the green zone, 85% probability going to go high. That was the entry here where the green arrow is, and it hit the wave 5 and went through, it smashed through. So really good. We'll talk about potential trade management strategies in this and the next lesson as well for these types of moves. So all looks good there. So basic entry criteria. So once we have everything set up, our stars aligned if you like, we've got to look for the stop loss 2 ticks past the wave 4. We're going to keep it nice and tight. Remember, we're not interested if it goes up high there. We need that stop loss in. So once we've got the wave 4 pulled back and into the pullback zone, we've got the 535 oscillator between 90 and 140%, and the stochastic crossing over in the overbought zone in this case, we can put that entry strategy together, and it doesn't need to be complicated. We need to keep to these simple rules and remain reasonably conservative when putting the entry strategy together. Okay, so again, wave 4, just above there we put the stop loss. The entry below the 6-4 moving average low, the red moving average low, and this is on your Elliott wave indicator suite there, so it's always automatic, and we're looking that as a starting point for our entry. We've also got to look at previous support and resistance levels when deciding on this entry price. And remember, we're on the 5-minute time frame, we won't go too far left. So here with this green entry here, we went just below this big green candle and the 6-4 moving average low. So a reasonably conservative entry strategy there. And then the risk to reward. So the gap between the stop loss and the entry, I class that as 1% risk on my trading account balance. Now the potential reward, the minimum that we say, is 1 to 1.6. So it's risking 1% to win 1.6% profit on your trading account balance. Now 1.6% doesn't seem a lot, but if you're winning on average 1.4%, say on 3 trades a week, you're doing doing around about 4% profit on your account balance a week just on this strategy. Remember, the Elliott wave indicator suite just isn't for futures, just isn't for stocks. There's lots of different ways we can use this and develop an overall strategy for your trading business to build some good profits there. Now, The risk reward needs to be really above 1 to 1.4 or 1.1 to 1.6 is our ideal. In this recent volatility during the beginning of 2018, the first half of 2018 when I'm recording this video, we have been trialing a risk to reward of 1 to 1.4, and that has been working out really very well as well. So when we're getting these really volatile markets and the stock markets aren't trending, with these futures we can reduce that risk to reward to 1 to 1.4, but no less. You need to be understanding that you're prepared to lose that 1%, so your win percentage has got to be above that 1%. 1.4 to 1.6 or above is what we're looking for ideally. Now again, this is a personal choice on how aggressive you're going to be when you want to manage this trade and set this trade up. We'll cover one trade management strategy in this lesson, and then more in subsequent lessons in this Wave5trade elite training course. So the perfect entry. Now it doesn't always happen, but when again we're looking for those high probability moves, and this is what we would class as a perfect entry. So let's go through it. Again, I keep reminding you of this because we just need these basic rules to be met, and if they are, we've got a high probability trade. So the first one, the stochastic has pulled back against the false breakout indicator. So we can see the yellow dots on the false breakout stochastic here as part of the Elliott wave indicator suite. So this denotes a really strong bullish momentum. If it pulls back against there, it's like it's an elastic band. It wants to return to that strong bullish momentum. So that's good. It's crossed over in the oversold zone. It's crossed over against those false breakout dots there. We have the 535 oscillator between 90 and 140%. The wave 4 has found support in the green zone there. Now it could be the amber or the red zone, but it's in our probability zone, so that's good. And then now we've got this green arrow, part of the stochastic strategy. These are automated on the chart. So we've got the stochastic pulled back against the false breakout indicator, the 535, the wave 4's pulled back. Now we've got this green arrow. See here now, we have this first move away from the wave 4. It didn't break out and close above the 6-4 moving average low. Now it pulls back on a shallower pullback, higher support level. We get the green arrow after the close of this first green candle on the 5-minute. So sensible entry is outside of the 6-4 moving average high, the green, which we've closed out of already, above this high of this candle which rejected that move up, and this is the previous day's close as well, this yellow hash line. So we've got a lot of stars aligned here to say, right, if we get through all of these levels, after all of these pullbacks and everything else has worked out right, we've got a high probability of going on and making that 5th wave move. So again, it did hit the 5th wave target and then continued to push through. Really, really strong move, and we're going to be covering potential trade management strategies to get that bigger move there. So we're going to go through one basic trade management first. Now this is the short that we did back on GC, on the gold futures here. So we've originally, if you remember, we entered just below the 6-4 moving average low and this big green candle low here as well. So we get into the trade and we're going short. Now one of the trade management strategies that we use are, we're looking for, in a short we're looking for lower resistance levels, in the long we are looking for higher support levels. In this case we're waiting for that first pullback against the move, and that's where this yellow arrow is now. So we've had this initial move down, we found support, and now it's come back up. We've got a lower resistance level and we've got that nice rejection doji there as well. So we then wait for the move to resume past that initial support level. So we've come down, we've found a lower resistance level. Now once the price action moves back below this initial support, That's when we adjust the stop loss just above this resistance level. Now that's our first trailing stop position, so we're almost risk free there. And that's one of the priorities when you're trading, day trading futures, is to get to risk free sensibly as soon as you can. So then we just repeat that until the target's hit. So in this case we did hit the target pretty quickly. Even if you didn't take profit at this point here at the low, it did pull back for a higher for a lower resistance level, so you could have in fact adjusted your trailing stop to this previous support level as well, just above there, and then it came down and hit the wave 5 again. So there was plenty of opportunities to either manage it sensibly or just get out when it hit target. It was a great risk to reward. It was 1 to 1.6, great trade, and he was probably only in there for about 45-50 minutes there. So really simple trade management strategy there, using support and resistance levels and following those through. We are going to repeat this trade management strategy again when we do 3 complete trade management strategies in the stochastic lesson, which is next. And talking of that, what if we are not in a trend? We'll use a stochastic strategy covered in this next lesson to help us look for other types of day trading futures. So we're going to go to the charts now. That is the next video, recorded live with an audience so they can ask questions, and we're going to go through examples. So that's the next video in this lesson.